Hey guys, Mark with Think Insurance, and today we're going to talk about the 6 different ways that home insurance is not covered. And there's a couple different versions of home insurance. So you've got what's called an HO3 and an HO5. The HO3 is what we're mainly talking about, which is probably 90 to 95% of anyone that has house insurance. It's called an open peril. Essentially, when you look at what's called your declarations page, that's the page that shows all of your coverages, it's going to tell you coverages that are selected. Well, if the coverage is not on there, then it's not going to be covered. The HO5 is kind of that opposite, where it adds an addition. Unless it's specifically excluded, then you're open to that option of having those covered. So jumping into number 1 is going to be flood. Flood is almost never covered on any policy in general. I believe it's even excluded on the HO5 version just because it's something that's impossible to determine. Now, water backup and flood are 2 different things. I'll link a video below where I go more into depth of that, but to give you kind of a cheat way to think about it is when water comes up from the foundation or in through windows, that considers flood. And any damage that you have to contents or the home, you're going to have a separate insurance policy for something like that. Some of you may have been surprised from your realtor when you bought a house that you have to get a flood policy, and you can get them fairly cheap, but some areas they're almost as much as having the home policy. So you're essentially paying twice for the same type of insurance, even though they're 2 completely separate pieces. The second coverage is going to be lack of maintenance. It's pride of ownership that we're talking about. That's the number one thing that realtors and underwriters and anyone that has to do with homeowners are looking for. So when I'm trying to get approval for a home policy, and there's a couple things that might pop up that I may have to discuss with an underwriter, they want to make sure that it shows pride of ownership. Essentially what that means is you're taking care of the roof. There's not shingles that are lifting up or starting to fray and fall apart on the roof. There's not a fridge or 2 fridges in the grass that aren't hooked up and are laying sideways that have mold in them. There's not cars on blocks and just junk laying everywhere. Sometimes it's just kind of like a mini hoarder situation where it's been a few years and you just haven't taken care of that. Well, what that does is that shows that you have no pride of ownership in the maintenance of your home. So they question on the inside if it mimics what's on the outside and vice versa. Now, maintenance can also fall into the category besides that portion. You may be super clean and take care of everything, but you just don't maintain the pipes, or you don't maintain the materials of the house, and it's not well taken care of to the point where things rust, things break. When there's obvious signs of small leaks or over time situations, insurance isn't going to cover that because insurance is designed for sudden and incidental occurrences. Earth movement or earthquakes is the third piece, where if there's an earthquake, it's just not covered. That's something also a separate policy. Depending on the state that you live in, you may not need it. It's not typically a policy that most people go through. Obviously, if you're in California, that's a completely different story, and you're going to have that as an additional coverage. The fourth piece is sewer backup. And sewer backup is completely different than having a pipe burst in your home or water damage come into the house. Sewer backup is from the sewer lines, and it's kind of essentially the utility portion. If you have a sewer backup, you're not covered. You can purchase a water backup policy where if like a sump pump overflows or something like that, the water trying to exit the house does come back up. That's one situation. But if it's from the sewer line, that's just an excluded piece. You're going to have to go after the government or the utility service if you want any of that coverage to be taken care of. The number 5 spot is your pets. If you have any bite history on an animal, you typically have to exclude them. Some companies won't let you exclude them, so you might not even be insurable with that specific company. Essentially, it's dogs that they're mostly worried about. There's what they call a vicious breed list. It's your pit bulls, your Rottweilers, your mastiff terriers, and a list of several other dogs that are with some companies excluded. Now, not every company does exclude those, so it depends on the company that you're working with. For example, in AAA in Michigan, they don't care what kind of dogs you have. It's just not a piece that they're worried about. Almost every other company does, so it depends on the company, the location, whether that is an excluded coverage or not. The sixth and final piece that we're going to talk about today is your jewelry. If you have jewelry, it's not necessarily excluded up front because most jewelry is covered to a limit. Normally it's $1,500. Depending on the package and the company you go with, it can be $2,500 per item per occurrence. And what that means is each item can max out whatever the occurrence is. If you have a max of $2,500 occurrence and you have 5 items that are $1,000 a piece, you've maxed out at the $2,500 and you lose the other $2,500. So the amount of jewelry that you have and need is the amount of coverages that you need to carry. Now, I'm actually working on a video series called Home Insurance 101, all of the coverages of home policy. At the timing of this video, we're on coverage D, I believe, as uploading, and we're gonna start getting into endorsements for home policies. So there's endorsements that you can add onto the policy. Once that's live, I'll link that here or below, so you guys can actually click to go watch the jewelry portion. But I'll give you a cheat sheet version. Essentially, you have 2 versions of the jewelry. You can cover what's called a blanket, which just covers all of your jewelry up to a max amount. Still be careful because they usually have a per item limit. And then there's what's called a scheduled jewelry. And it means I have a piece of jewelry or 10 pieces of jewelry, and each of them has an appraisal from the jeweler, and I can prove their worth, and we're gonna get them covered for those exact amounts. Now it takes some time because you got to get a copy from the jeweler and you have to have very descriptive of what that piece is just in case you lost it while you're on vacation. So the insurance can know that those are situations that they can cover those parts. At the end of the day, you really need to make sure that you have the right coverage. I hope this doesn't scare you as far as going through different companies. It really matters what agent that you work with. If you guys are interested in getting a quote, I will link below some companies that I've worked with that have done really well. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.